Real estate investment is one of the most popular ways to build wealth and secure financial stability. However, like any investment, it comes with its own set of pros and cons. In this video, we will explore the advantages and disadvantages of investing in real estate. 1. Steady cash flow. Real estate investment can provide a steady stream of income through rental properties. If you invest in a property that generates enough rent to cover the mortgage, taxes, and maintenance costs, you can enjoy a consistent cash flow. 2. Appreciation. Real estate values tend to appreciate over time, which means that your investment can increase in value. This can provide a significant return on investment if you decide to sell the property in the future. 3. Tax benefits. Real estate investors can take advantage of tax deductions such as mortgage interest, property taxes, and depreciation. These deductions can reduce your taxable income and lower your tax bill. 4. Control. Real estate investment provides a level of control that other investments do not. As the owner of the property, you can make decisions about rent, maintenance, and upgrades that can increase the value of your investment. 1. High upfront costs. Real estate investment requires a significant amount of capital upfront, including a down payment, closing costs, and other fees. This can make it difficult for some investors to get started. 2. Risk. Real estate investment comes with risk, including the possibility of a market downturn, vacancy, or damage to the property. These risks can lead to financial losses. 3. Time commitment. Real estate investment requires a significant amount of time and effort, including finding and managing tenants, maintaining the property, and dealing with repairs and maintenance. 4. Illiquidity. Real estate investment is not a liquid asset, which means that it can be difficult to sell quickly if you need to access your funds. In the next segment, we will explore the different types of real estate investments and their pros and cons. There are several types of real estate investments, each with its own set of pros and cons. Let's take a closer look at each type. 1. Rental properties. Rental properties are one of the most popular types of real estate investments. They provide a steady stream of income through rent payments. However, managing tenants and maintaining the property can be time-consuming and costly. 2. Flipping. Flipping involves buying a property, renovating it, and selling it for a profit. This can be a lucrative investment strategy, but it requires a significant amount of capital and expertise in real estate and construction. 3. Race. Real estate investment trust REITs are companies that own and manage real estate properties. Investors can buy shares in the REIT and receive a portion of the rental income generated by the properties. REITs provide a passive investment option, but they may not offer the same level of control as owning a property outright. 4. Real estate mutual funds. Real estate mutual funds invest in a portfolio of real estate properties. This provides diversification and professional management, but it may not offer the same level of control as owning a property outright. 5. Real estate crowdfunding. Real estate crowdfunding platforms allow investors to pool their money to invest in real estate projects. This provides access to larger investments and diversification, but it may not offer the same level of control as owning a property outright. Each type of real estate investment has its own set of pros and cons. It's important to carefully consider your investment goals and risk tolerance before choosing a type of real estate investment. In the next segment, we will explore the factors to consider when investing in real estate. When investing in real estate, there are several factors to consider to ensure a successful investment. Let's take a closer look at each factor. 1. Location. The location of the property is one of the most important factors to consider. A property in a desirable location with good schools, amenities, and transportation options is more likely to attract tenants and appreciate in value. 2. Market conditions. The real estate market can be cyclical, with periods of growth and decline. It's important to consider the current market conditions and the potential for future growth or decline when investing in real estate. 3. Property condition. The condition of the property is another important factor to consider. A property in good condition with modern amenities and features is more likely to attract tenants and appreciate in value. 4. Financing. The financing options available for the property can impact the overall return on investment. It's important to consider the interest rate, down payment, and other financing terms when investing in real estate. 5. Rental income. The potential rental income generated by the property is an important factor to consider. It's important to ensure that the rental income is sufficient to cover the mortgage, taxes, and maintenance costs. 6. Property management. The management of the property can impact the overall return on investment. It's important to consider the time and effort required to manage the property and whether it's feasible to manage it yourself or hire a property management company. By carefully considering these factors, you can make an informed decision when investing in real estate. In the next segment, we will explore the potential risks and challenges of investing in real estate. While real estate investment can be a lucrative way to build wealth, it also comes with its own set of risks and challenges. Let's take a closer look at each. 1. Market downturns. Real estate values can decline during a market downturn, which can lead to financial losses for investors. 2. Vacancy. If a property is vacant for an extended period, it can lead to loss of rental income and increased expenses for the investor. 3. Property damage. Damage to the property, such as from natural disasters or tenant negligence, can be costly to repair and impact the overall return on investment. 4. Tenant issues. Managing tenants can be challenging, with issues such as non-payment of rent, property damage, and legal disputes. 5. Regulatory changes. Changes in local or national regulations can impact the profitability of real estate investments, such as changes in zoning laws or tax policies. 6. Liquidity. Real estate investment is not a liquid asset, which means that it can be difficult to sell quickly if you need to access your funds. By understanding these risks and challenges, investors can take steps to mitigate them and make informed investment decisions. In the final segment, we will summarize the pros and cons of investing in real estate and provide some tips for successful real estate investment. Real estate investment can be a lucrative way to build wealth and secure financial stability, but it also comes with its own set of pros and cons. Let's summarize what we've learned and provide some tips for successful real estate investment. Steady cash flow. Appreciation. Tax benefits. Control. High upfront costs. Risk. Time commitment. Liquidity. Rental properties. Flipping. Rates. Real estate mutual funds. Real estate crowdfunding. Factors to consider when investing in real estate. Location. Market conditions. Property condition. Financing. Rental income. Property management. Risks and challenges of investing in real estate. Market downturns. Vacancy. Property damage. Tenant issues. Regulatory changes. Liquidity. Do your research and due diligence before investing. Invest in properties with good potential for rental income and appreciation. Consider the long-term potential of the investment. Manage the property effectively to maximize returns. Diversify your real estate investments to mitigate risk. By understanding the pros and cons of investing in real estate, considering the factors that impact investment success, and taking steps to mitigate risks and challenges, investors can make informed decisions and achieve success in real estate investment.